Welcome back, viewers. You're watching The Savera and I'm Shifali. After a historic surge that pushed gold and silver prices to record high this month, both metals have begun to see a pullback. Globally, gold declined by as much as 2.9% today, dropping 4,004 per ounce, following an even sharper 6.3% intraday fall yesterday, the steepest single drop in more than 12 years. Silver also experienced significant losses, falling over 2% to around $47.6 per ounce after 7.1% plunge the previous day. Analysts attribute that this sharp retreat to profit-taking as investors booked gains following months of unprecedented price increases. Tim Watson, chief market analyst at KCM Trade, told news channels that profit-taking movements have begun to snowball, noting the high temptation for traders to secure profit at levels never seen before in the gold market. For Indian investors, the timing has been particularly inconvenient as the multi-commodity exchange remains closed today for Diwali, Balipradipata. Domestic traders have therefore yet to react to the global sell-off. When trading resumes on October 23, that's tomorrow, gold and silver furthers are expected to open lower. As of now, December gold futures on MCX were at rupee 1,28,000 per 10 grams, down rupee 271 or 0.21% from the previous close. Silver futures stood at 1,50,000 per kilogram, down rupees 327 or 0.22%. This correction follows a remarkable rally in which gold touches $4,381.21 per ounce on Monday, making nearly 56% gains for the year, driven by strong central bank purchases, geopolitical tensions, and expectations of interest rate cut by major central banks. What's next for gold and silver? Analysis suggests that the recent pullback is partially due to traders turning their attention to microeconomics indicators, particularly US inflation data and monetary policy updates. Commenters from US President Donald Trump expressing optimism about a potential trade deal with Chinese President Xi Jinping also helped alleviate some global trade concerns, slightly reducing gold's appeal as a safe haven asset. Investors are now closely watching the US Consumer Price Index for September, which was delayed due to the ongoing US government shutdown. The CPI data will provide insights into inflation trends and the Federal Reserve's next interest rate decision, with some expecting a 25 basic points cut in rates next week, followed by another in December. Despite the short-term dip, experts believe that gold and silver are likely to remain firm over the medium term, supported by ongoing global uncertainties, sustained central bank purchases, and expectations of a weaker US dollar. Market participants note that corrections such as one observed this week are normal after months of rapid gains. The festival season in India, including Dhanteras and Diwali, continues to bolster physical demand for precious metals, cushioning the market against steeper falls. However, once festival-related buying tapers off, prices may moderate if global risk appetites improve or if inflation data signals slower than expected interest rate cuts. For Indian investors, tomorrow, MCX session will be a critical indicator of market direction. While the meteoric rise of gold and silver may not continue uninterrupted, long-term drivers such as geopolitical and economic uncertainties, central bank purchases, and expectations of lower interest rates remain firmly in place. Experts advise investors holding positions in gold and silver to brace for potential short-term losses, but also highlight that these dips may present strategic buying opportunities for those within well-planned investment strategy. The market is expected to balance between profit-taking corrections and sustained demand driven by global and domestic factors. That's all for now in this update. Stay tuned to The Savera. Download the app and follow us on various social media platforms.